Hi, my Bitcoin followers! When the price of Bitcoin declines, it's common to see the terms crash or correction used more or less interchangeably. However, the two words actually mean different things. In today's video, we're going to see what actually Bitcoin price crash and correction means. Without further ado, let's begin. Bitcoin is known for being a highly volatile asset. This means its price tends to fluctuate significantly over a relatively short period of time compared to other assets. It's also why many traditional financial investors, including Warren Buffett and Carl Icahn, consider it a highly risky investment. According to recent data, Bitcoin's one-year volatility stands at 32.7%, significantly higher than the most volatile assets and asset classes, which are oil, U.S. stocks, and U.S. real estate, 18.8%, 8.41%, and 7.15% respectively. While the high volatility has its upsides, particularly during bull cycles where prices can rise dramatically, it also means that prices crash and correct on a frequent basis. Bitcoin is the first largest cryptocurrency, capped at 21 million coins. It has a reputation for being a profoundly volatile asset, meaning that its price tends to fluctuate dramatically over a relatively short period compared to other assets. High volatility can also be beneficial during bull markets. Furthermore, it implies that Bitcoin prices can crash and correct frequently. Both these terms, crash and correct, are often used interchangeably, but they serve different purposes. In some cases, crashes can foretell the bear market and a prolonged period of cascading prices. In contrast, corrections can oftentimes be a sign of a strong uptrend rebounding to a support level before retesting a recent high. Therefore, understanding the difference between the two is crucial. In the last few years, Bitcoin has grown to be one of the best performing assets in the world. It has grown over 1 million times in both value and popularity. However, all forms of assets face their share of crashes and corrections. In the past, this cryptocurrency has shown phenomenal growth. The cryptocurrency infamously grew by 600% in a matter of 6 months. However, it comes with a price of being the most volatile of digital currencies. At a point, the price of the cryptocurrency plummeted by 30%. Its value dropped almost $70 billion in a single day. Despite showing 300% higher growth than last year, it is nowhere close to its former glory. A crash is widely regarded in traditional finance as an over 10% drop in price over the course of a single day. These are often fueled by impactful, sudden changes in the crypto market that caused panicked investors to exit en masse. While technical factors can have dramatic effects on Bitcoin's price, large crashes seem to be catalyzed more by fundamental circumstances such as microeconomic events, major company announcements, and sudden changes to international regulations and policies. The largest crash ever recorded on Bitcoin's charts took place on April 10, 2013, shortly after the U.S. Financial Crimes Enforcement Network, FinCEN, shut down crypto exchanges Bitfloor and announced Bitcoin's exchanges needed to register as money transmitters. Bitcoin prices collapsed over 73.1% in 24 hours. During more recent times, the infamous Black Thursday crash of March 12, 2020, takes the top spot as the biggest crash after prices fell 40%, from $7,969.90 to $4,776.59, following the World Health Organization's declaring of the coronavirus as a global pandemic. If you are enjoying the video, then make sure to hit that like button and subscribe to the channel for more interesting videos about Bitcoin. A correction is characterized by a gradual decline where prices drop more than 10% over the course of several days. These usually indicate bullish traders have become exhausted and need time to consolidate and recover. Exhaustion occurs when a majority of buyers have bought the underlying assets and there are no more new buyers appearing to support the uptrend. If sell orders continue to pile in without anyone on the other side of the order books buying them, prices start to fall. Corrections can be influenced by minor events, but tend to be initiated by technical factors such as buyers running into strong resistance levels, depleting trade volume, and negative discrepancies between Bitcoin's price and indicators that measure its momentum, like the Relative Strength Index. In over a decade's time, Bitcoin has achieved what other cryptocurrencies are still striving for. It is the first largest cryptocurrency, and it tops the cryptocurrency list of about 5,000 cryptocurrencies. Although it was introduced with the intention of replacing traditional fiat, it has quickly established itself as a haven. According to reports, the fall of Bitcoin value was triggered due to two main reasons. Firstly, it has to do with China's ban on institutions in providing cryptocurrency services. The China Banking Association issued a notice warning to its member banks highlighting the risks associated with cryptocurrency. Additionally, Elon Musk tweeted about the environmental constraints associated with mining Bitcoin. He even went as far as canceling Bitcoin as a preferred way of payment to buy a Tesla. You might be wondering if these led to a Bitcoin crash or if it was merely a correction. Corrections are like the spider under your bed. You know it's there, lurking, but don't know when it will make its next appearance. While you might lose sleep over that spider, you shouldn't lose sleep over the possibility of a correction. In the market for the long term, a correction is only a small pothole on the road to retirement savings. The market will eventually recover, so they should not panic. Of course, a dramatic correction that occurs in the course of one trading session can be disastrous for a short-term or day trader and those traders who are extremely leveraged. These traders could see significant losses during times of corrections. No one can pinpoint where a correction will start, end, or tell how drastic of a drop prices will take until after it's over. What analysts and investors can do is look at the data of past corrections and plan accordingly. Volatility in Bitcoin is not a phenomenon, but is one of its most prominent features. That means it is normal for its price to fluctuate up and down rapidly. Analysts believe that the current dip in price could be a healthy correction and could be a good time to invest in the crypto market. It is not the first time that Bitcoin is witnessing such a steep fall in prices. Though a 40% drop in its value looks dramatic, it is pretty typical in volatile markets, especially after a mass bull rush of over 600% rise in value. Even though Bitcoin witnessed over an 80% drop in a single day in the past, its value bounced back over 10 times shortly. Although the longest bull run seems to have halted, Bitcoin's value is still 300% higher than last year. Looking at the past, Bitcoin has always bounced back in value over the long run. Unfortunately, most investors tend to think short-term when it comes to cryptocurrencies, which is another case for their volatility. The asset is just a decade old and is yet the nascent stage of growth. Hence, there could be sharp highs and lows along the way. So guys, let me know down in the comments section below. Did this video help you? For more interesting content, give the video a thumbs up and don't forget to subscribe to the channel for more awesome and interesting videos related to Bitcoin. Have a nice day, and I'll see you in the next video.